E-commerce Gold is brought to you by Rewind. Accidents happen. Maybe you installed an app and it messed up your theme, or a store collaborator deleted product images by mistake. It's a common myth that Shopify has a backup that you can use when something goes wrong with your store. The fact is they don't. That's untrue. That myth is busted. So what do? You use Rewind to equip your Shopify store with automated backups. Rewind should be the first app you install to protect your store against human error, misbehaving apps, or collaborators gone bad. It's like having your very own magic undo button. It's trusted by over 100,000 businesses, from side hustles to the biggest online retailers like Nix, Lord & Taylor, and Moomin. It's even a Shopify Plus certified app. Best of all, visit rewind.com/e-commerce gold and get your first month for absolutely nothing, free on us. The Ecom Gold podcast has partnered with Clearco to provide you with financial tools to grow your business without having to give away equity. Clearco is the world's largest e-commerce investor and growth platform, giving founders the financial tools, capital, and network they need to grow. Plug in your Shopify store and your loan could be agreed within just 24 hours. Visit clear.co/partner/Vixxr, VIXXR, for exclusive deals, £1,000 off your first loan as a podcast listener, and more information. This show is brought to you in collaboration with Vixxxr, a leading Shopify agency with a mission to grow and migrate brands to Shopify Plus. They've worked with some of the world's largest brands and can help you level up your e-commerce performance. Visit Vixxr.com, VIXXR.com for more information. What an episode I have in store for you today. It's with none other than Drew Fallon, CFO of Mad Rabbit, the Shark Tank success story. And we get into all things e-commerce finance. Drew has a background in banking, where he helped to do a number of e-commerce IPOs. Please like, subscribe, share it with your friend. Without further ado, here we go. Drew, thank you very much for joining us on the show. How are you?
Doing well. Thank you for having me. I'm happy to be here.
Awesome. It's great to have you on. And we'll jump straight in with the first question. Can you give everybody an overview of Mad Rabbit?
Yeah, so Mad Rabbit is the leading direct-to-consumer tattoo skincare company. Really, we sell all natural products, skincare stuff, right? So lotions, balms, gels. We just launched a body wash a couple weeks ago. Essentially, the value prop behind Mad Rabbit is not very dissimilar to how people with like dyed hair use certain kinds of shampoos and stuff, right? But like mass formulated products are bad for dyed hair, and they're bad for tattoos, and they're bad for all kinds of things, really. And so Mad Rabbit was basically born with this value prop in mind of these giant companies are making these big products that are really bad for tattoos, and there's this whole niche that really can benefit from all natural tattoo conscious skincare formulations. And so that's pretty much the 30-second spiel of it.
Yeah, that's awesome. Thank you very much. And I think everyone would be interested just to get to know you a little bit more before we jump into the other questions. So what does your typical daily routine look like? What kind of habits do you keep? What gets you up in the morning?
Yeah, it's a good question. I did the whole sort of morning routine thing for a really long time. I remember when I worked back in like actual banking, and I had to be in the office like super early, and so I really bought into this whole like notion of morning routine. And I would wake up at like 4:30 and like go to the gym before work. I had to be there at 6 and had like meditation and all that. I think honestly, as I moved into a more cumbersome is not the right word, but a more sort of all-encompassing sort of lifestyle with like Mad Rabbit, right? Like it's in the startup world, like you don't really turn work off, honestly. Like it's just kind of always going. Like, and so really what I do these days isn't totally dissimilar, right? Like I have my whole morning routine where I wake up and I do a little bit of journaling and I do a little bit of meditation, take some vitamins and stuff. But really it's kind of like I have this weird sort of like anxiety about work, where I kind of like get up and start working right away, for better or worse, and we'll see how long that is sustained for. But I think honestly the whole like morning routine sort of like guru-y type attitude is like a little bit overrated because I did do like the whole like wake up at 4:30 like cold shower thing for so long, like maybe like a year or two I did that, and like honestly like it got to a point where I was just kind of like, damn, like this sort of sucks, and so and like kind of moved away from it. But there are like certain things that I do kind of still keep. Like journaling, I think is really powerful, and just I start my morning by writing down 3 things that I'm thankful for every day, and I think it's just a good way to kind of wake up with some gratitude and put yourself in sort of a good mood and stuff. So um, I guess like long story short, I don't have like a giant routine that I do anymore, but there are certain things that I took away from that period of my life that I got really into it that I do think people could benefit from.
I think that's super interesting. I never had a corporate job, and I never really had to be at a place at a certain time with certain tasks to do for a certain amount of time. But I think you're right. You just never turn off when you, especially in startup world, your brain's always going. That can be somewhat exciting, but again, it also leads to anxiety. And I know a lot of founders that just can't switch off, but those kinds of things, meditation, exercise, journaling, ditto, I do exactly the same. And it's interesting how many people are picking up those habits and how impactful they are on people's lives. Is a big shift, I think, in that way, where people are just self-care focused, and then the work actually becomes better, in my opinion, once you are that. So help us understand a bit more about your background. Then you mentioned banking before Mad Rabbit, so as far back as you want to go, really all the way back to school if you like, what classes you took and how you ended up on this journey.
Yeah, so basically it all kind of parlays into itself. So I went to college with the 2 guys who founded Mad Rabbit. So Oliver Zach and Salam Agbator were classmates of mine. And I guess I would probably trace this whole route back to like maybe 2016. I was probably a sophomore in college when I launched my first e-com company on my own. And so basically kind of started tinkering around with like just side hustles, right? Like building stuff on the internet, building websites, running Facebook ads back when they were super cheap and like all that kind of cool stuff. And so I met Salam actually kind of through that ecosystem, right? I mean, you're 2 entrepreneurs at the same school, right? Like you're never too far removed from each other. And so Salam and I got really close. Maybe like even probably before they started Mad Rabbit, maybe it was a little bit after, but basically we were both working on e-commerce businesses. And so I was always more financially inclined, and Salam was always really good at marketing, particularly Facebook marketing. And so I would help him with like his books and forecasts and budgets and stuff. And then he would help me on the other side with like the marketing and creative and branding kind of things. And so, you do that for a certain amount of time, right? And you just kind of start to get really acclimated to working with somebody like that. And to be honest, like I was good at school. I think I had like a 3.5 GPA or something. Like I wasn't bad at it. But it was never really like my biggest focus, honestly. Like I think I was always just kind of the opinion like there's a lot more to learn that's like sort of outside the classroom. I did really enjoy my finance classes and stuff. But like we went to Miami of Ohio, and like when you go to a school like that, it's like all those professors and curriculum, all they really care about is like giving you the knowledge to like get into like the sexiest like sort of Wall Street job, right? And so they want you to go work at William Blair or JP Morgan or something like that, or Robert Baird, for instance. But I basically kind of got like almost like entangled in this sort of like entrepreneurship thing where it's like I started this business, started to get involved with like Salam and Oliver, and you basically just get like this whirlwind of like once you start something like that, like you don't really stop. It just kind of becomes like part of what you do. And so I think honestly I probably learned a lot more from just like dabbling in my own sort of ventures and working with Salam and just kind of Googling and researching around and stuff. And so ultimately, and we'll talk a little bit more about this, I imagine, but like ultimately, like Mad Rabbit starts to do what at the time to me seemed like just crazy numbers, right? Like I remember when Salam was talking about how they were doing like I think $1,000 a week or something in sales, and I was like running my own business, and I was doing a quarter of that maybe, and I was like, holy shit, like these guys are like going to the moon. Like how do I get in on this? And in hindsight, like it's funny to look back on that because like obviously like that's like an hour these days, but like it's just like I was looking at these guys, I was like, how are they doing it? Because I couldn't really get to that step that they were at. And then over time, just kind of, continued to work with them until ultimately about a year ago, it became, it made sense for us all to go full time. So we actually weren't full time on the business for the first 2.25 years, basically until last February, I think. And by that time, Salam, Oliver, and myself we're all full time. And so it kind of just, going back to my background, was like basically just dabbling around in e-commerce and finance, and then I did go work for 2 years in what was equity research. It's like a division of banking, where I covered e-commerce companies for 2 years after college, while we were all running Mad Rabbit on the side, right? And so what happened there was like I'm covering these e-commerce companies, right? Like think Wayfair, Carvana, Amazon, Shopify, Facebook, like that whole universe of stuff. Um, and that was where I really learned like how to like do modeling and how to really understand, the statements of these kinds of companies, as well as fundraising, right? Like I think we did 4 or 5 IPOs, while I was there in my sector. And so, my experience between, my own entrepreneurship, my own journeys on that side, and then also, the more sort of tactical finance stuff that I learned a couple of years after school, really just kind of led into what I think Salam and Oliver saw a lot of value in early on, as far as, bringing somebody on that kind of understood that side of things.
Awesome. And what there's a couple of questions I have there. What are the, if you're the financial side primarily, what are the other founders? What do they bring in terms of their core key skill sets?
Yeah, so Salam's the guy who literally scaled Mad Rabbit from 0 to like $3 million in sales by just like being in Facebook Ads Manager. And to this day, that's really his job, right? Like he's more of our acquisition performance marketing head, right? And so he's just frankly gifted at that, and he always has been. And then Oliver's really like the kind of the brains behind the whole operation, right? Like the idea was his, the branding was his, the logo was his, the name was his, all that. He really came up with the whole thing. And so I think Oliver's really good at kind of being the one to like take a step back and really understand, where this thing can go, and crafting really the vision for the company. It's cool, right? Like if you're in the CEO position, you kind of get like information from all angles, right? And so you can kind of synthesize that in a way that nobody else in the organization can. And I think Oliver does an exceptional job of listening to his people and understanding, how it all works together.
Sounds like you have a dream mix of the right people in the right positions, pushing forwards. I think a lot of founders would love to have that kind of structure straight out the gate. And then you said you tried a couple of businesses before Mad Rabbit yourself. Remember what you were selling?
Yeah, so my first one was like a hydration startup. So I started it in 2016 too, right? And so like think of like a hydrant or like a liquid IV, like a packet of like electrolytes and vitamins and stuff. Really just like never really got like anywhere exciting. I mean, it wasn't like doing $0 in sales, but nothing that was like ever going to have me like, quit my job basically. And then I did also try another one where I wanted to basically, so like supplements, right? So I was kind of in like the food and / supplement space when I was dabbling in this stuff. And so like protein powders and pre-workouts and all that stuff are like marked up like insanely. And so I basically wanted to are you familiar with public goods at all?
Dive into it anyway for the listeners, just in case.
So public goods is just a company that basically will sell you stuff at cost, like maybe like a soap, or they have all kinds of stuff, but like soaps, or they probably have protein powder, they probably have body wash, shampoo, just like random household goods, right? And what they do is like they will sell you a subscription to public goods for, I think it's like $60 a year, and then you can buy that shampoo for like $3 instead of $10 at the store. So they basically take the markup and just get rid of it, and then they make their contribution margin basically off of your subscription. And so I wanted to do that with supplements. You could basically charge somebody $10 a month or whatever and sell them a protein powder tub that would probably be $30. You could sell to them for $12. And so that one, there was a lot of technical challenges with that one. Like Shopify, like at the time, like just wasn't equipped to support that kind of business model. I don't know what public goods was built on, but I had a really hard time basically like getting the actual technical infrastructure to support the, subscription, and like it was just a weird like checkout situation. Um, so that one like literally like barely didn't really work at all, honestly. I thought it was a good idea. I still think it's a good idea. But those were my two kind of experiments before Mad Rabbit, and like all the while like I was working for Mad Rabbit like on the side, right? And so I was just kind of trying like all these different kinds of things. But I could never get it to work as well as Lam and Oliver could with Mad Rabbit. So yeah, that's kind of how you end up here.
Okay, great. And it sounds like you're being put to work on the things that you're best at, which is primarily financial by the sounds of things, which is cool. So can you just walk us through some of the key financial milestones for Mad Rabbit since you started there?
You say milestones?
Yeah, sorry. Some of the key moments, I guess, for you guys, like your first meaningful amount of sales through to your first investment, and subsequently a second round. Just some of the key moments that have led from when you joined to now.
Yeah, I mean the first thing that comes to mind was our first $1 million month, which was, I mean, just you feel so on top of the world, right? Like I think it was a year ago. It was March of 2021, and it was like we did like I think like I probably shouldn't be too specific on numbers, but like a couple $100,000 like a few months before, and then it's like a really ballooned into this like $1 million month, right? And so you hit this run rate where it's like you feel like you've reached this escape velocity. And so that was probably like the best that I've ever felt, honestly, when we were because that was like 2.5 years in the making too, right? But other than that, like, I mean, I remember in 2019, Black Friday was like, we were doing, this was like really early on for me. So Mad Rabbit started in January of 2019. I was probably involved, by July or like October, maybe kind of like late Q2, Q3 kind of deal. And like, when I first started looking at all this stuff, I think they were doing like maybe 30 grand a month, like not even. And then like by November, by Black Friday, by December, it was like 100 grand a month. And so like, it was just really cool to see this insane sort of growth, coming from just pure product market fit, right? Like this is just a product that hadn't been offered before and that like everybody wanted. And like, the half of the customers are women, half the customers are men, right? Like it's totally gender neutral brand. And it's just, everybody just kind of universally agrees that like this is something that should have existed before. And it was really cool to see that unfold. So I think as far as like watching the growth, like tripling in the matter of like 2 months into Black Friday in 2019 was super exciting to watch. Our first $1 million month was, just euphoric. Like that's once you get there, that's like when it feels like, okay, this thing could really be like an actual like venture scale business, right? I mean, like if you're doing a couple $100,000 a month, it's like those can be awesome businesses, right? But like we had set out, we were at that time setting out to like go and raise like venture money. We're like, hey, like we're gonna blow this thing up, like we're gonna go all the way with it. And then as far as like financings go, our first financing was with Mark Cuban off of the Shark Tank deal. So that one wasn't like super exciting, I guess. Honestly, like you don't really like I didn't feel like super good about that. Partially because we didn't really know how Mark Cuban was going to be as a partner. He got, in my opinion, a really good deal on Shark Tank as far as valuation goes, like he tends to do because he's Mark Cuban. And it was actually like, I mean, so they shot Shark Tank in September of 2020, and that deal we didn't even like get funded from that deal until like May. So it was kind of like it was a rigorous process. I mean, Cuban's team was brutal. Like there was so much due diligence, like so much going on in the background. Like the documents were so overcomplicated compared to like what you see in traditional sort of finance, things like that. And so I guess, it's obviously like it's awesome to have Mark Cuban as a partner, and he's been like way better than I think we would have anticipated. But at the time, it was just a really long, kind of intense, like drawn out sort of process to get that one wrapped up. Very shortly after, we raised our seed round, technically seed round. And so that was a $2 million round that was led by Acronym Venture Capital, and that was in last June. So that was really validating, right? Because you get like Mark Cuban involved, you get this New York venture capital firm involved. There was some other institutions, and it was just really validating to kind of get real, institutional investors behind your mission and behind your vision and behind your team. And kind of like, now you have this cap table of people who like all agree that like, hey, this can be something like really special, right? And so I think that was, that was the biggest thing that I kind of took away from that, right? Like, because we didn't even actually need the money at that time. We saw opportunity and things that we could use it for. So we decided to raise it, and we got a pretty good valuation for it. Um, so we did it. And it's really great to, like, every time you raise a round, right? Like, you get these new partners that bring value in different ways, and you get capital to make investments and accelerate growth and double down on things that you've been wanting to be doing for a long time. And then we also raised, just last month, a $4 million round. So we've actually done two real rounds, but like three, I guess, technically, if you include Cuban. And that one was just because we saw so much opportunity in front of us. And to be honest, like $2 million, it's a lot of money, right? It is a lot of money, but it wasn't enough for like what we wanted to do and like where we were going. And so what we did was we basically just took the existing investors, raised some money from them, and then got, a couple $1 million from some other outside institutions that came in.
Wow. And your background in e-commerce equity research, how does that help you in those kinds of situations? Does it give you confidence? Does it actually make you feel frustrated when you see a deal when you know the other guy's getting a good option there? I mean, how does that play?
Yeah, so I think it's really important, and this is like really honestly one of the biggest things for me is like I was on the sell side, right? And so what I did is I covered this list of I think like 20 e-commerce companies that were publicly traded companies, and are you familiar with like sell side equity analysts? Like they're the ones that like put out the price targets, right? They're like, hey, like I think Twitter should be a $60 stock, like buy. What you don't really see, like what most people don't really realize is that I think like 80% of the companies that are covered in that context by those analysts are rated buy because it's the sell side, right? Like we're trying to sell stocks to the hedge funds, to long onlys, the big Fidelities, like whoever. And what you're doing is you're selling equity, right? I mean, whether it's in the form of covering the stock, or if you do an IPO, you're selling equity, correct? So it was really no different from what I did with the seed round, right? Like the institution was different, right? Instead of Fidelity, it was, a different venture capitalist. But at the end of the day, like you're just selling equity, right? I mean, it's all sales. You're just kind of basically putting some more numbers behind it than like maybe like selling a software or something. But so I think that was super relevant experience for me, because I'm dumbing it down a little bit. Like there's obviously like a lot of like due diligence, like background work that goes on. But at the end of the day, having that experience with what makes investors' eyes light up, right? Like what do they perk at? Like what do they like to hear? What do people really want? And like what is it that you can convince them of that will give them conviction to make the investment? And so I think my experience on the sell side, selling equity, basically, was super, related, was super relevant to sort of a lot of the major like fundraising initiatives that Mad Rabbit has undergone.
Can you summarize some of those points that make investors' eyes light up? As you said, I'm sure it's quite complicated, but if you could wrap it up in a bow for our listeners, what sort of things would be in that?
Yeah. So, and I'll explain this sort of as it relates to the sector that we are in, which is beauty. In beauty, investors really like high gross margin products, right? So, if you're in food and bev, let's say you're just selling like a drink or something, and it's like your margin's 30%. Like a venture capitalist will have a really hard time. I shouldn't say really hard time. We'll have a harder time getting behind that because there's just less room to play with, and after you sell the product, like how much money are you left with? And so people really like strong gross margins, right? Like so big markups. They really like large opportunities, and so like one of the examples that I can give here was like instead of trying to convince investors that tattoo skincare was like this $1 billion category, right? Because it doesn't really exist yet. Like Mad Rabbit's creating the category, so I don't have like a TAM to like just point to from like a Nielsen article and be like, that's how much people are spending on tattoo skincare. And so what like the basically the language that we use and like the pitch deck and stuff was like, hey, like there's over 100 million people in the United States that are tattooed. Like imagine if like they just used some skincare products that were good for their tattoos, right? Like how big is that market? Like that sounds pretty big, right? And so I think like big markets, strong gross margins, Um, and then advertising efficiency is really important too. So, and I think, this audience will understand this, better than most, but we have really, really good customer acquisition costs. And that's just a function of two things, really. Number one, um, sort of a lack of competition, frankly. Like we don't really run into any like real big spenders on online channels. And then two, Mad Rabbit's not bad at advertising and branding. So I think, at the end of the day, what do all those things sort of trickle down to, right? It's like bottom line, like high gross margins, like good advertising efficiency, in a big market, right? Like if you do those three things, the investor who's buying the equity, right? And like what is equity? Like it's a a stake at future earnings. If they think that those three things can basically amount to future earnings, then they'll buy it, right? So I think as far as summarizing it goes, those are probably the three most important. I mean, there's a ton more that you can get into, but for high level purposes.
Yeah, thanks. And how have you found the VC world? Obviously, you've quite recently been through it. I was listening to another e-commerce podcast, and they were talking specifically about the pressure on VCs to invest because of the current climate and interest rates and things like that. But that's obviously changing now. But what was your experience did you have one VC in mind? Did you have a network there already and you went to them? Did you shop around? What was your experience of directly working with VCs?
Yeah. So there's certain, you can raise capital in a number of ways, right? So you can either go to a venture capitalist who is going to require extraordinary return. You can go to friends and families / angels who will probably just give you money and hope that they get a little bit more back. Or you can go to like a family office or like a private equity firm that doesn't necessarily require the 100 times that the VC is looking for, but they'll be more comfortable underwriting a deal that they think they can get, call it 5 to 15 times on. And so what we did, and so like what the methodology is for raising a seed round, right? Because in theory, like your seed round should be the lowest price that you ever issue shares at. And so we were like, okay, like if we can go and do a pure venture round right now, right? Because this is the lowest that we're ever going to be priced at. And so I knew a guy from college who he's the founder of a company called Oros, which is like this technology apparel company. And his name is Michael. And so Michael was like incredibly helpful to me even before I was at Mad Rabbit. And so he had raised, maybe a seed round or a Series A at the time. And he basically helped plug me into that network. And so it's honestly kind of a domino effect. Like once you get into like one intro, like you put together a deck, right? You send the deck out, whoever bites, and you get a call with them. And even if they end up passing, if they're a good person and your story is like interesting enough, usually they'll pass you to somebody else. They'll be like, hey, not for me. But I do have this friend at XYZ shop who would take a look at it. And so that's kind of what happened to us. Like, so we set out to raise the seed round last like December or January maybe. And so I hit up Michael and I was like, how do you do this? Like, what's step one? And he was like, I'll put you in front of a few people. And so he did. And I don't think any of those people said yes, but they kind of pass you around, and these VCs they're all chasing deals, right? Like kind of like what you alluded to. Like there's like this idea right now that there's way too much capital and way too few good deals out there, and so it's their job to look at stuff, right? And if you put together a deck that's interesting enough, they'll look at it and they'll usually take a meeting with you. And so it's really just this domino effect of like getting in one meeting and then getting intro to other people. It's just fundraising is a full-time job, right? Like it's just taking intros, taking calls, putting together materials, like getting through round. You get through 4 rounds of diligence with someone and they tell you no, and it's like, okay, that was 2 months. And there's the whole thing. But ultimately, and this is something that's I think really important for people to understand, is usually you just have to find, it only takes one yes, right? And so you just have to find somebody that's a fit with. And so our seed lead, acronym Venture Capital, Joshua Siegel, the GP there, it was just a fit, right? Like it fit his thesis, and not everybody has a thesis that involves tattoo skincare and, whatever else it is. And so you just have to find somebody that's looking for something in your sector, B, somebody who's looking for something that they think that they can get their required return on, and C, somebody that you want to work with, right? I mean, like we talk to all of our investors a really fair amount, and you don't want somebody who's up your ass all the time, but you do want somebody who's paying attention, who thinks that they can help and be strategic, etc. And so yeah, it's really just it only takes one. Yeah, I mean, we probably, to be honest, it wasn't like we got like 100 no's and like one yes. I think we got probably like 30 no's and before we got a yes, which is emotionally exhausting. Honestly, like you just get beat down left and right, and it's like you start to doubt yourself, and you're like, maybe they're right. Like these are all world class professional investors, like, and they're telling you that like it's not going to work. But you just have to find that one, and it's really just a matter of meeting as many people as you can.
Makes a lot of sense. And there seems to be division, I don't know by what percentage, let's just call it 50-50, of founders that are trying to bootstrap their way all the way up to as big as they can get the business, and then other founders or companies who are looking to get investment. And I don't think there is a right or wrong way, but maybe could you explain some of the advantages of each and why you might want to look at getting investment versus not taking investment?
Yeah, so bootstrapping is great. Mad Rabbit was bootstrapped for 2.25 years or so. I think, and I do think there's like this little bit of like a glorification of bootstrapping, and like people think that like if you raise venture capital, like it's because you couldn't like do it on your own. And that may or may not be true in certain contexts. I think that if you have a business that can be $100 million business and like top line business one day, or you think it can be, there's no reason not to go raise money, right? Because what people that like subscribe to this notion of bootstrapping are all concerned about is like, hey, nobody else owns my company, right? And it's 100% of the pie for myself, but like the typical sort of like bigger pie, smaller piece kind of math, basically, right? If you think that your company can be worth a couple $100 million at some point, it makes way more sense to go out and raise like venture or family office or private equity capital, because A, you're going to get there way faster than someone else. And B, if you don't do it, somebody else in your space is going to, right? Like if Mad Rabbit decided to want to be bootstrapped, forever, we'd probably be comfortably doing 8 figures in sales, right? And it'd be an awesome business for, the people who own the most company. But like, why wouldn't somebody just go out and raise their own $4 million seed round and just absolutely crush us, right? Because if they think that it can be worth $100 million top line one day, they're going to go out there and they're going to raise money because it's going to help them gain all the market share that they can. And so I think, at the end of the day, and the flip side of the coin is if you have something like insanely proprietary that can produce cash flow on its own, no reason to raise money, right? Like with Facebook, they raised money, but they raised a very small amount of money for a $500 billion company or whatever, in their sort of private rounds. And so that was because simply they just didn't really need to. And so if you have that kind of like total unicorn sort of opportunity, I would say don't. But if you're in a space that like, isn't wildly proprietary and like does require like creating a brand is expensive. And if you don't do it in a potentially big category, somebody else will. And so that was kind of our methodology and our thinking as far as, going out and raising money. But bootstrapping is great, right? I mean, like, what's better than owning 100% of your $50 million company? Like, that's freaking awesome, right? And then, like, if you wanted to sell it one day, like, you could cash out. But, at that point, like, nobody's, like, making rules for you. Like, you don't have to report to anybody. Like, you do whatever you want. And it sounds great, right? I mean, we don't have any investors that we disagree with, fundamentally about the business at this point. So I think as far as, like, autonomy goes, it's not much of a differentiator for us, like, whether or not we own the whole company. But there's give and take, right? I just think if you're in a category that requires, building a brand and building a category like we are, it's going to take money to do that. And generally speaking, the best source of capital is, something like a family office or a venture capitalist or a private equity firm that has kind of seen it before and has the connections and stuff. And so that would be my take on it.
Yeah, of course. What kind of KPIs are you focusing on now that you have investment, or KPIs and metrics for the business, daily, weekly, monthly, yearly? Or do you have autonomy on that, and do you change it depending on who you're talking to, whether it's the founders, whether it's the investors? How do you kind of measure the business at this point?
Yeah, I think it could be different for different businesses. I think for e-commerce businesses in general, a really important thing that everybody's always managing to is LTV to CAC. So I think between like LTV to CAC, burn, and revenue growth, that to a sophisticated investor, that tells pretty much the whole story, right? It's like how well are you doing acquiring new customers? How well are you doing monetizing those customers? How much money are you burning while you do it? And is the revenue growing? And so I think for investors, that's certainly what they care about. With like when Salam, Oliver, and I get into it, we're quite a bit more granular than that. Obviously, like we have like monthly, review or monthly reviews where you really dive into the P&L and you kind of see like, hey, like what went wrong. Like you do a variance analysis every month, right? Like if you have, I'll call it like an FP&A department, like at Mad Rabbit, like that's just me, literally. But like if you have anybody who's like working on this kind of stuff in your business, like they'll take their monthly budget for say February, and then they'll take the actuals for February and go back and look at, where did we miss on accounting or on marketing? Where did we miss on wages? Did we overpay in contract labor? And then you basically just do a variance analysis and kind of pull forward the learnings and try to basically get as close to your budget as possible. So we literally will go through every single account every month, which I don't do with investors because you just don't. I mean, it's not. They don't want to hear that. But yeah, I mean, high level like LTV to CAC, burn, and revenue growth are probably like the three things for this kind of business model, right? For like an e-commerce sort of consumer goods company that you could really kind of get the main picture for.
Okay, and variance. Is there any? Can you dig any deeper on that and what that actually is, or is it as simple as just looking at what you predicted or forecasted versus what actually happened?
Yeah, I mean it's pretty simple, right? So like what I do is like I put out monthly or quarterly budgets to the marketing team because like I mean the biggest cost center in any e-commerce business is marketing, right? And so like specifically like the marketing team, and I'll be like, hey guys, like spend this much on Facebook, spend this much on Google, like Pinterest, like whatever, all the way down, right? And so then like once I finish closing the books on March or on February or whatever example we're using, I'll be like, hey, like you spent, $5,000 instead of $3,000 on Facebook, or I'm making these numbers up, on Facebook this month. Like what happened there? Like why did we go over? Like were we seeing good return? Like was MER holding? Like was it worth it basically? And it is honestly that simple though. Like it's literally just like comparing your budget to your actuals and then diving in with the appropriate, P&L managers basically to determine whether or not that was like a good thing or a bad thing, right? Like if we overspend on like paid search or TikTok, it's not necessarily a bad thing. Like we crushed my TikTok budget for like January or whatever, but it's because it was working. And like, I didn't magically know that like TikTok was going to start working for Mad Rabbit in January. I just said, hey, go out and spend, a couple $1,000 or whatever. They end up spending a ton and it's like, oh, well, good. Like it's because it was producing return. And so it's slightly nuanced in that sense, but at the end of the day, I mean, it is quite simple. I think you really just compare like what you thought it would be to like what it actually was, and then trying to figure out why.
That's super interesting. So how are you? So you're passing on a budget in essence to marketing or to a department to go ahead and spend. How are you forecasting that budget? Are you using previous data? Are you using what are you factoring into that? I love the flexibility of them being able to overspend. That's obviously needed. But how are you able to forecast that for them?
Yeah. So this is a slightly loaded question, depending on how granular your model is. Basically, the way that I do it is I model our revenue off of ad spend, right? Like how many customers I think we can acquire. Like let's just say our CAC is $10 and we want to produce, $100 in revenue in a month, then we have to acquire at least 10 customers to produce that revenue, right? And then whatever comes back, from like an LTV perspective is pretty much bonus, I guess. But you basically can back into how much you're willing to spend to acquire a customer, how much you think that customer is going to be worth, and then how many customers do you want. And so that all fuels into the top line. And then when you have like and we have a subscription element to our business, right? So then you have to kind of model, what is the recurring revenue component to that? And so all of that feeds into top line stuff. And really, it's all, I do it by week, literally. Like I do like literally weekly spend and like weekly cohort sizes and like all these things that I think are reasonable. And I'm the finance guy, right? So like my definition of reasonable is slightly different than the definition of reasonable of marketing. Um, but so I literally will do it like by week. How many customers do we want? How much are we willing to spend? How much we think they're worth? Like if I want to do, a couple $1,000,000 in a month, like how many customers do you need to do that? And that comes down to like your AOV or LTV, right? And then you kind of back into the cohort size. Okay, how much money do we need to acquire a cohort of that size? And this is like a model that feeds this is like the entire company model, right? So like if you change your desired cohort size for the third week of March, like that would literally change like your balance sheet cash, right? Because there's a cash flow involved with like acquiring customers. And so it's cool, right? Because you get this really like holistic view on like how the company's affected from every single angle. But yeah, I mean, it's literally, it's like a classic like 3-statement financial model. And like if I, let's just say I raised $4 million in February and I was like, hey, like April's a really strong month for us usually, like there's really good seasonality there. Like if I'm cool with, taking that $4 million cash balance down to, totally making this up, like 3.9 million, or, how many more customers could I acquire if I was cool with the balance sheet looking like 3.8 million versus 3.9 million? Because I'm going to be spending money to, acquire those customers. And they don't, in the case of Mad Rabbit, they actually do, but typically like you don't always make money on the first purchase, right? Like you could have a $30 AOV and a $30 CAC, and like you have to wait for purchase 2 or 3 to actually make money off of them. And so basically, long story short, like you build a financial model for the entire company and what you want the company to look like, and the budget is just the P&L of that model.
That's amazing. And I suppose who then, so one thing that popped into my mind as you were talking then was just how dynamic that can make the business, not necessarily just when times are good, but also when times are bad. And I don't know if you've experienced any supply issues at all, or stock issues or anything like that, but I suppose that gives you have that insight ahead of time and gives you the ability to factor that into your model and therefore decrease budgets and do things that way, so that you hopefully shouldn't sell out or burn any customers in that process. Has that actually happened? Have you got an example of that happening? Or
Yeah, so we launched a sunscreen in March of 2021. We bought, I think, 60,000 units, which is a fair amount. And we sold it all just, I mean, insanely fast. Like, I think like 3 or 4 months. And it was like, I don't, like I'm going Salam running marketing. He's like, hell yeah, like we just sold it all. And then me in finance, I'm like, fuck, like we just sold it all. And so like I think that was our only really big stock out. I do think that was more of a function of like we had no idea that the sunscreen was just going to be that successful. And like you'd be really hard pressed to justify buying 150,000 units of a product that you haven't launched before and that you have no idea what the velocity is. So I'll chalk it up to just like we just weren't prepared, honestly, for how quick that was going to be. But since then, we really haven't experienced any stockouts. And so what we do now, and I brought on a head of operations who helps me really deeply with this. What we do now, though, is like that revenue model that I was talking about. You can basically take, like, let's say that I think that, half of our sales are going to come from tattoo balm, 30% are going to come from sunscreen, like whatever the breakdown is. You can take those weekly revenue numbers, strap percentages to them as far as like what you think product wise is going to make up that revenue number, and then divide it by the selling price, and you have like your weekly units, right? And so what that does is that nowadays, like now that we have like a little bit more capacity, like it's not just me anymore. Like I have this head of operations who's really good at planning. I can basically give her my revenue build for the month, and then I work with her to determine what makes up that revenue, and then you can basically make a production schedule and make sure that you never stay in stock or never go out of stock. And so I think we've done a much better job of it since because that sunscreen sellout, like that hurt. Like we should have done a couple more $1 million last year, I think, like if we would have stayed in stock of that for full year sales. And so you really don't, and that's part of the reason that we had to bring on our head of ops, Ray. We were like, damn, like that just can't happen again. And so I think, once you add people to the team, like it starts to unlock projects and initiatives that like you literally can't do by yourself. Like a year ago, like it was literally just me, Oliver, and Salam, right? And like we just hired our 10th person that starts in like a week or two. And so it's like you start to just be able to do things like that really maybe don't like obviously drive impact to the business like right away, but like just the fact that like we won't sell out this year of anything unless like something crazy happens. The fact that we won't sell out this year of anything is just incremental growth year over year, right? Because it's like if I sell, let's say it was like 60,000 sunscreens last year, and like now I can sell 120,000 simply because I didn't go out of stock. That's just low hanging fruit. Like that's just a layup, basically.
It makes a lot of sense. And from a logistical perspective, do you ship your own goods? Do you use 3PL?
Yeah, we have a 3PL out in California who's actually also our co-packer. And so we have a really great relationship with them, and it works out really well.
That's good. And how do you, from a financial perspective, make those decisions? Is it simply just a cost play versus time and materials to ship your own goods versus using a 3PL? When it comes down to making those fundamental business logistic decisions, what are you looking at in your modeling to understand what's the best way to move?
Yeah. So for a company like a beauty company, our cost to ship stuff is actually more than it costs to make it. So this is like probably $4 to ship, but it only costs a couple bucks to make. And so it's like, where does the leverage in the P&L really come from? Not really the product so much so as the actual fulfillment, right? Like if you're spending more on fulfillment, there's just more room to save. And so like the motivating factor for, we used to use a more traditional 3PL, I'll say. But then once we realized that we could like save all this variable cost on like the fulfillment by going with him, because, we have just a really great relationship because he's our manufacturer, and we basically came to an agreement where we could save money with him. And it drives leverage like through the whole business in a way that you couldn't even achieve if you got like cheaper product costs. Our stuff's also like organic and all natural, so it's a little bit more expensive than like a typical sort of like garbagey sort of Unilever product, I would imagine. And so that makes it really important for us to have to focus on, getting cost savings elsewhere, all while maintaining that growth mindset, right? Like you don't want to like raise $6 million of like VC and then be like, oh, how can I, basically you want to grow, right? Like you're doing it to grow. Like you don't want to necessarily just like cut back on everything and like hinder growth. And so it's kind of a balancing act, but generally I would say my predisposition is usually around cost. Like I said, though, like while maintaining the growth mindset. And so I realized that we could save, X cents per unit basically by using this new 3PL. And it makes a lot of sense.
So you mentioned a bit about your competition there, and maybe they don't use organic materials in their products and potentially not the best fit for tattoos. What are your feelings around the general space in terms of your product's positioning, in terms of the competition? How would you summarize the product market fit?
Yeah. So kind of like back to what I said, at the beginning of the broadcast. So tattoos forever have been like this sort of thought of as like this taboo, grungy, sort of underground, like sketchy sort of culture, right? If you ask your grandparents or parents, like, what do they think of tattoos? They'll be like, like that's so gross. Like, why would you do that to yourself? Kind of thing. And now it's like my 19 or 20-year-old sister like has like a cute little flower tattoo like on her arm, and like, I have a tattoo on my leg, and our CEO Oliver has a couple of tattoos on his arms and stuff. And it's like, what are we? We're just 20-something-year-old kids like walking around the city, with tattoos, and like it's just commonplace at this point. And so this whole like idea that like tattoos are this weird sort of grungy, overserved culture or underserved, overlooked culture is really changing now. So like, depending on what surveys you look at, like I think it was 2012, there was like 21 or 23% of people in America had a tattoo. And like from that same survey, like by 2019 or 2020, like it's like over 40%. And so now you're talking about, a population of over 100 million people that are completely underserved by the skincare market. And so, you're talking about the actual positioning of the products. It's like Mad Rabbit launches a daily body lotion. Okay. Why on earth would you pay $25 for a daily body lotion when you could go from Mad Rabbit when you could go to CVS and pick up a Jergens for $8? Well, maybe you're somebody who has a couple of tattoos on their arm, right? And you spent $2,000 on them. Jergens, for example, it's very rich in vitamin E. Vitamin E is great for people that don't have tattoos because it's really good at pulling impurities out of the skin. Great. Like, who wants impurities in their skin? Nobody wants impurities in their skin. Vitamin E, however, does not understand that like a tattoo is like something that you want there. And so it sees the ink as this impurity, and it basically in like the subdermal layer of the skin, like will break down the ink faster over time. And so like basically you end up with this tattoo that your mom told you was going to look like crap in 20 years, and now it looks like crap in 15 years because you're using stuff on it that just breaks down the ink, makes it fade quicker, et cetera, et cetera. And so this demographic of 100 million people that we're talking about should be, and apparently are, willing to pay a premium for these all natural products that contain ingredients that are effectively cognizant of the fact that they have tattoos, that they want to preserve their tattoos, et cetera. And so I think from a positioning perspective, this is the joke, and I've said it so many times now that it used to be funny, but like, in pitches and stuff, I'll be like, I've never been in a Procter & Gamble boardroom, but like my guess is there's not a lot of tattoos in there, right? And so it's like, you got this group of like 65-year-old white dudes sitting in the boardroom in Cincinnati, and they're not thinking about tattoos, right? And they're not like, oh, like how can we help, that, like they just don't even think about it. And so Mad Rabbit's experiencing this first mover advantage, I would say, in the category, frankly, because nobody else really thought of it before, at least not on the internet, right? Like, we have competitors, right? Like, this isn't like the newest idea in the world. But as far as like going direct to consumer and like innovating on the actual business model, Mad Rabbit was the first company to do it in the category. And that's why we've scaled past, what all of our competitors have done, even launching 7 or in some cases 20 years after they did.
And a lot of the time, for founders, at least, I think their first products are gut feeling, a bit of intuition and experience, and they bring them to market and do the research afterwards and worry about the financials afterwards, fail fast and that kind of ethos. But since that very first product that you guys banked on, you've released subsequent products and really broadened that range. And I think for a lot of founders, they would still be acting on gut when they do those sorts of things from their first product and their intuition. But have you, because you were engaged in the business so early on, were you able to influence the products that were launched from a financial perspective? And if you were, what kind of things were you looking at?
That's a good question. So am I involved in product development? More from an operational perspective, right? Like, I actually help make the products. I don't think of the products necessarily. I think the body wash that we just launched was my idea, maybe. But really, Oliver and Salam are the ones that really drive, the product sort of formulation and product idea. But that said, we also kind of let our community tell us, right? So Mad Rabbit's in this like interesting vertical where like we have this unique opportunity to really foster this community of tattooed people. So like, real quick, I'll just use an example. Like, think of like Harry's Razors, right? This is a multi-billion-dollar CPG company. But like, why does Mad Rabbit have more Instagram followers than Harry's Razors? Like, they're literally 100 times the size. Well, it's because nobody likes looking or talking about razors on the internet. Like, there's no real community for that. And so Mad Rabbit, we have this very outsized for our like company size, like social following in Discord and Facebook VIP groups and like all these different ways of like fostering community. And it's because people actually enjoy engaging around this topic with each other online. And so Like the bar of soap that we're launching in, I don't know if this is public or if I'm allowed to say this, but we're launching a bar of soap in like 2 months. And it wasn't our idea. Like I didn't think of it. Oliver didn't think of it. Salam didn't think of it. We just sort of saw people talking about in our Facebook VIP group, talking about how they really want a bar of soap from Mad Rabbit. And, if you have a Facebook VIP group of 5,000 people and there's 40 people commenting on a thread about how they want a bar soap, like, let's just say that's a good sample size and like extrapolate that to our, our current customer base of, a lot. And it's like, okay, like that's a real way that we can provide value to the community. Right. And so I think we really look to them, honestly, to tell us what they want. And it's because, our ultimate goal at the end of the day is to bring these people value in ways that no other brand has. And how do you do that? You do that by doing what they want. And that's really been the main driver, I would say. Like, we're a very community centric company, more so than I think, everybody likes to say that, and the word community makes me want to throw up because everybody on Twitter uses it so much. But like, I do think that Mad Rabbit's in a unique position to kind of leverage that community because people are just so engaged around tattoos. And so we do really, we lean on them, honestly, for that side of things.
One of the ones that gets me is family. That's worse than community in my book. Yeah, right. But one observation that I've made, looking at some of the fastest growing brands that we've had the pleasure to work with, people like Gymshark and others in the past, is that they initially became part of the community or accepted by the community, and then that community, including their brand, became a culture, and then finally they became the leaders of that culture. So they were so symbiotically engaged with the culture that it was almost impossible to tell the difference between the community of the brand and the products, and everything was just part of one big oozy soup of just this culture. And I guess that seems like the trajectory you're on. You become indistinguishable with, tattoos. And that's just a super interesting something that gets me excited anyway, whenever a brand is so deeply embedded in community. I know that's such a strong play for you guys. And that's just going to be so interesting to see how that evolves. How are you, is it organic? Does it feel organic to you to just cultivate this community? Or are you having to actively work at it? Are you trying to build out the community, or is it organically building and you feel like you're a part of it?
I think a little bit of both. I think it was super organic at one point. But now it's like we're putting like real resources behind it, right? So like when we launched our Facebook VIP group, like it filled up with like 2,000 people in like a day or something. And like we literally just like posted about it. It was like, hey, like come check this out, like come share your tattoos. And like one of the things that we say is like, hey, like when you join the group, like share your tattoo. And it's like there's all these people sharing their tattoos and be like, hey, like who did that? Like where'd you get that done? Like what is that? What does that mean? All this stuff. So I think there's certainly an element of like organicness to it. I do think though, like now that like part of the reason that we do raise the money is because we're trying to do things that I don't think a typical brand has really tried to do in terms of cultivating community. And so I think at this point, it really does feel like we are trying to build it because we honestly really are. So one of the things that, we talk about like is like Reddit, for example. The r/tattoos subreddit is like 4 million people, and it's like it's bigger than like the bodybuilding subreddit. So there's 1.4 million people in the bodybuilding subreddit. It's almost 4 times the size of the bodybuilding subreddit, right? And it's like I think when you think about like bodybuilding.com, I think that's a kind of a good proxy for what we're trying to do with Mad Rabbit, right? Like you go to bodybuilding.com, you're a fitness enthusiast. You have all this content around, not only nutrition plans, but workout plans. You can buy supplements there. You can watch videos. You can learn about all kinds of things, right? And so I think we're basically trying to do something similar in the tattoo space. And although it is a little bit easier, honestly, because of our vertical, and there is that like organic component to it, it is a serious focus of ours. So we are like certainly intentionally building this.
I want to squeeze some final finance stuff in before we get to a lightning round, because I'm conscious about how quickly we're eating this time, but it's so interesting. One thing I did see on Twitter, it's how we connected actually, is through your great posts on Twitter. So definitely follow if you haven't already. Is Wink Wine? We have an episode with them, and they're a public company. And I can see, even, based on the tweet and the stats that you posted, the company has 4 million of cash on the balance sheet and is public. That's insane. It seems insane to me, but can you explain your reaction and maybe how you think or why they became a public company?
Yeah. So let's think about this like from my perspective, right? So I did public equity research for 2 years covering mega cap companies, right? So think of Google, like what do they have? 100 billion, 200 billion dollars of cash on the balance sheet. And then also like Mad Rabbit had just closed a $4 million round 3 weeks before I read that report. And so like for me to like see this like literal like SEC formatting that I used to look at every single day for 12 hours a day that had, thousands, and then at the top it said in millions, right? So you're talking about billions of dollars or whatever. And then to go see like, $4 million in the bank, I thought it was just like hilarious. Like I was like, oh my God, like I didn't even know that was possible. I want to be clear, like not digging on those guys like at all. Like that was not my intention, like by any means. It was just like, holy crap, like I can't believe, like it's funny, right? And so the reason that I'm so shocked by it is like it's so expensive and cumbersome to be a public company, like as far as like reporting goes, right? Like you have like all these different compliance issues, and like you have to really have like an entire accounting team. I don't know what the WINS team looks like, but it seems to me, and these guys are obviously way smarter than me, so they know what they're doing, and I'll leave that there. But like it seems to me like an unnecessary stressor to like be a public company that like just doesn't necessarily need to be public yet. And then somebody pointed out to me in the comments, there was like, they also did like a really successful like equity crowdfunding thing. And so they're just pursuing sort of alternative routes of financing. And there's nothing at all wrong with that. It's an awesome company, big fan. I was looking in like the footnotes for like the in thousands or like in millions kind of thing on the reporting. Cause like, it's just, I was so blown away. I was like, I honestly didn't even know that was like possible. And I spent 2 years in that field, right? Like,
I'm going to try and dig into that with them. I'll find out. They haven't come on yet. They're due to come on. I don't know what order the episodes will be released. But something really interesting you just said outside of all of this. Is it WINS? Is that how you say it? WINS.
I honestly just said that because I thought that's what you said.
I said wink, but I really need to find that out. It's not the first time that I would have done that.
That's why they look and how they say the name.
I'm going to have to look that up. One of my first e-commerce meetings back 7 or 8 years ago, I was meeting with what I now know to be a lingerie company. And I sat through the whole meeting and said lingerwear instead of lingerie. And I still got the business. I have no idea how, but they honestly, just well worth researching, especially before you come on podcast. So I'm going to look into that for sure. Right. So there's so many other questions that I have here, but we're just not going to have time for them. I think what's going to be most beneficial for people listening is just some of the mistakes or myths or common misconceptions around e-commerce finance. If you don't have the luxury of someone like yourself on your team and you're a founder and your strengths lie in creative or marketing and you're trying to bring a product to market, what are the things you just absolutely cannot afford not to do from a finance perspective?
Couple things here. This is a good question. I'm glad you brought it up. I think so. Number one, I want to say this. I want to say people who are really good at marketing. So finance has been like painted out to be this whole black box, right? And like it was done by the financial services industry. Like we just use big words, like make people think that they can't do it. Because like if they think they can't do it, then like they'll pay us to do it. So prefacing it with that, I think that these days, and in this particular business model, marketing is so quantitative. And so it's so numeric, right? And like I said earlier, right, when we were talking about budgeting, it's like our budget is 60% of it or something is marketing, right? And so it's like people in marketing, they understand finance way better than they think they do. They haven't like sort of grasped the idea that they do. So like let's think about like a P&L, for example. Like you have revenue, cost of goods, generally marketing, right, and then everything else. And so what these marketing P&L owners don't really realize is like they own 60% of the P&L, right? And it's like they understand like they understand like customer acquisition costs, and like that's like those are realistically like financial metrics, right? Like it all trickles down into the numbers, and like they just I sometimes think that people don't even try to understand finance because they think that they can't. And when at the end of the day, it's so closely intertwined in e-commerce with marketing, because what do we spend all of our money on? We spend all of our money, our cash flow statements in e-commerce literally have like 3 lines in the operating cash flow section, right? It's like, what did you spend on inventory and what did you not pay for? Payables. And then on the P&L on the other side, it's like, how much money did you spend on marketing, right? And it's like that. And so I really do think that people would have a better handle on this kind of thing if they would just try a little bit more and not just chalk it up. Because it's boring mostly, right? Like people who are into branding and marketing, like they don't really want to do the accounting and shit. So like, okay, maybe that's the reason. But I think, so number one, I think, anybody who understands marketing probably understands finance better than they think they do. But number two, as far as like, don't fuck this up, is getting everything in place. So all of your systems, your accounting system, your inventory tracking system, you need to be able to account for stuff, right? So you cannot afford to lose track of anything in your business, right? Especially if you're like a bootstrap business and, you're trying to like make money and all this, like you have to understand where every single unit of inventory went to. You have to understand where every single dollar of sales came from, the margins associated with those sales, what kind of marketing spend did it take to generate those sales, et cetera, et cetera. And so I think just getting all the fundamentals in place is super important from day one, because once you do that, you don't have to go back and fix it. Like I remember when I started with Mad Rabbit, like one of the first things I did full time was like literally went back and like fixed all the stuff that like from years ago was like just wrong. And like that sucks, and at the time sucked, and like you don't want to do that. So I think like just getting all the systems in place from day one is like for sure the most important thing that you can do when managing the back office of probably any company, but specifically these, because it'll just make your life so much easier. And it's kind of an ongoing process, right? Like you're never done with that. Like you're never done sort of optimizing your systems and accounting and all that. So I guess take it with a grain of salt. But what you don't want to do is set up your QuickBooks on day one, sell $3 million worth of stuff, realize that you didn't expense anything in QuickBooks, then have to go back and like figure it all out, right? Or like sell all this inventory and then realize that you only have 20 days left of stock and it takes you 4 months to get shit from China, but whatever. There's a lot of that you can do sort of on the foundational front to ensure, a certain level of lack of headache, I guess, if you will.
And what are the tools that you're using to help you do all of those things?
Yeah, so QuickBooks, like my next company is gonna replace QuickBooks because I just can't believe that it's like the only option. But it's like you have NetSuite, right, at like the enterprise level, and then QuickBooks at like for everything else. And it's like, how can there not be some sort of like SMB solution in between? I don't know, but fine. Maybe QuickBooks, it works. It's not the greatest thing ever, but it does work. So we use QuickBooks for accounting. For our banking, we use a company called Row, sort of new wave, like neobank. They actually do accounts payable too, which is super nice because I just want everything to be in one place. But we also do accounts payable with them. And then there's like a bunch of like other like sort of back office type systems like Gusto for payroll, guidelines like a 401k. I mean, there's like that's just actually boring. But like as far as like accounting, QuickBooks, and banking is Row. Row's great. I'm a big fan of Row.
Are there any Shopify apps that you use to help you with specifically finance?
Yeah, I mean, like you have like TaxJar, right? So like you got to pay your taxes. So like TaxJar is like probably a necessity. If you don't have that set up, like you definitely should. Other than that, though, I mean, most of the Shopify apps are like marketing stuff. I mean, there's a lot of really good apps that help you track like LTV on like a cohort basis, right? So you can kind of, and like I spend most of my time looking at that stuff because it's like, okay, like how is LTV trending? Like if LTV has gone up 50% in the last year, should I be willing to spend 50% more to acquire a customer this month, kind of thing? So I think that those apps do a really good job of helping inform me around like what kind of budgets I'm willing to put out. Like if your customer today is worth $100 and it was, last year was worth $50, it's like you shouldn't keep your CAC probably the same, right? I mean, you want to maintain like a good like LTV to CAC ratio, but like as customers get worth more, you should be willing to spend more to acquire them. So
what app was that? Sorry, TaxJar. Is that different?
Oh, I didn't name a certain app. The one that I use is called By the Numbers, and that's a really cool one that you can see. Like it's really like a cohort waterfall of like each month, each LTV, AOV, PF, orders. I mean, you can see it all. And if you're trying to manage the finances of a company, like this goes back to like the idea of like marketing people understanding finance better than they think they do, right? Like LTV to CAC is like a total like marketing metric, but like no, it's not. It's like purely a financial metric, right? Like it's like LTV. If LTV is revenue and CAC is marketing spend, like that's 80% of the P&L, right? And so like just understanding that from a finance perspective, which is also the marketing perspective, is important as far as like what you're willing to budget for certain initiatives and stuff.
Excellent. I think we'll move into the lightning round. I wish we could talk for longer on this, and maybe once this has gone out, if there are any additional questions, we can have a look at doing another round because finance is just so important to e-commerce. Yeah. And I think you've shed some great light on some of those subjects. So if not Mad Rabbit, what do you think you would be doing today?
My accounting software that's going to uproot QuickBooks.
Oh, okay. Sorry, you're developing this. You're going to bring
No, I'm not. It's just it's my like wet dream, I guess, if you will. Like it's just something that should totally exist, but it doesn't. That was kind of a joke. If not Mad Rabbit, I mean, I think I might still be in equity research, honestly. Like I really like that, or maybe even like investment banking. Like those guys just work so much. Like it's such a cool investment banking, such a cool profession. Like I don't know why they make it so hellish. Like I don't know if I would do that, but either start my own company or stay in equity research, I guess.
How big in terms of revenue do you think the company could get?
I mean, we're building a $100 million company here, honestly. I mean, I think, we've experienced a certain level of success with relatively little resources. We, only had really 2 products last year. We had, for most of the year, just the 3 of us with like 2 sales channels, right? And so I think, we've gotten to a point now where it's like we firmly believe that this is a company that can scale to 50, 70, $100 million in top line, just because there's so much that we haven't done yet, right? Like we're not even in like a serious retailer yet. We're launching a lot more new products now, but like we're gonna launch 6 or 8 products this year, and like that's that's AOV, that's LTV, that's top line, that's a lot of opportunity to grow from just honestly things that like you would have done. Like, so we're in year 3, depending on how you look at it, I guess. Let's call it year 3. And really it's like year 1, honestly, because we've only had full-time employees for 13 months and, we only had 2 products. So to answer your question, I think we can build this company to a $100 million company over time as we launch new products and go through new sales channels and get big retailers. Like a Target, obviously, is going to be critical to reaching that kind of scale.
And are you in, how many countries are you
in? So online, we've sold in like a lot of countries, honestly. We haven't launched any countries from like a marketing perspective, but like they somehow just find us. I think 3% of our business last year was Canada. So like we'll launch in Canada, maybe like late this year or next. We'll launch in the UK. UK is actually a really great market. There's a cool brand called Stories in Ink that does something pretty similar to what we're doing in the UK. But we get a lot of UK, a lot of Australia. Our sunscreen's like low-key popular in Australia. And so there'll be some good, and like international expansion too, right to your last questions. Like, we hit a certain level of revenue in 2021 with like no full-time employees, like 2 people or 2 products and like 3 people in like 1 market, right? Like the United States is the 5th most tattooed market per capita. So like there's so much other opportunity like internationally as well.
Yeah, and the education piece, well, when I was researching this and the product, I mean, I have a couple of tattoos myself and I had no idea. I just accepted that fading was a thing that happened and just no clue. And I use Bepanthum. It's like a baby's like kind of nappy rash cream when I got mine done, because honestly, that there just wasn't really a product that was recommended to me by my tattoo artist. They were just like, well, you can just go grab this. And okay, cool. I use that and I've never done anything since. And it's definitely fading.
Crazy? So. Like it's like tattoos are literally thousands of years old. And like you get a tattoo today and it's like the first thing you ask the artist, like, what now? He's like, I don't know, Vaseline, which is petroleum jelly, which is like chemicals on your open wound of a tattoo. Like, how does that make sense?
There's so much anxiety as well. When you get your first tattoo, you spent all this money on it and you really want to look after it and you have to look after it. So you just got to have that, the proper product to do so. It just makes so much sense. Okay. How many web domains do you own personally?
Like 2, 3, well, 2. I think I own projectavalon.com and sidekick.com or something.
What motivates you in life? What do you want out of life? Maybe aside from money.
Oh, it's a good question. I honestly, money is not really a big part of my life. Like when I took the job with Mad Rabbit, like I think I cut my pay by like 70% or something. Like I just want to build something, honestly. Like I'm kind of bored all the time if I'm not like doing stuff. And I think, what really motivates me is just being a part of something with great people like Oliver and Salam. Those are my brothers at this point. I just want to build something that wasn't there before. And it's obviously, Mad Rabbit's like the manifestation of that today. But I think, as you sort of think about how you want to be remembered or like what you want your legacy to be, like for me, it's really 2 things. I want to be able to help a lot of people, at a scale that, traditionally probably isn't like super reasonable. And also just like building something that, I think should exist that doesn't. And so, I think, a lot of people are motivated by money, and money's probably a really good motivator, right? I mean, there's like, who doesn't like money? Like, I'm not saying I don't like money. It's just like, it's not like why I do Mad Rabbit, right? Like there's a reason that I took like a huge, piece of my compensation in equity. And it's because I want that equity to be worth something, right? Like I don't care about like the salary that much. I don't care about how much money I'm getting in my paycheck every single month. Like, I just know that if we can build this thing into like what we think it can be, like the money will come, right? Like it's a byproduct of like really doing the right thing and helping the right people. So I don't worry a ton about that. For me, it's really just like, I don't want to sit at a desk like until I die kind of thing. I figure like kind of like, why not try something? And so that was like, honestly, like kind of my thought process in between. Like I remember quitting my job a little bit over a year ago, and certain people are like super supportive. Like Mad Rabbit's a very different business today than it was when I did that and when I started working with them. But at the time, like it probably like wasn't like in hindsight even like the smartest decision that you could have made. Like I had a lot of people telling me like, "Are you sure you want to do that? Like, you have a pretty good job," that kind of thing. But I was like, "Yeah, but like that's not fun. Like this is fun."
So true. I think there's so many people that will relate to that, and if they don't relate to it, then they should, because it's just not about the digits in the account. But right. Having said that, how much money in the account is enough for you to say job done, boots hung up? And what's that figure?
That's a good question. If for me to never want to work again.
I mean, you can passion projects, messing around, like investing, but you're not 9 to 5.
I think if you have a couple $1 million, you're probably good, right? Like $2-3 million bucks. Like if you ever hit that number in terms of like liquid, availability, you invest it, not like an idiot, and like it compounds pretty well, and like you're probably pretty good to go. And then at that point, like if I were ever blessed enough to get to that point, I would probably just do passion projects, or like maybe I'd start another company. It's such a roller coaster, man. Like there are ups and there are downs. Like and it's been going on for a while now. Like it's been 3 years, and like the roller coaster of this whole journey is just so insane. And like I really admire serial entrepreneurs, because people who are able to kind of wrestle that roller coaster, more than once, even if they don't have to, is pretty incredible. Like it's a grind, emotionally, physically, spiritually, mentally, like it's everything. So, I don't know if I would like go off and like start a new company, a really serious new one, if I got to that point, but I wouldn't say never.
And you're Chicago, right?
I am in Chicago, yeah.
So if not Chicago, where would you be? Anywhere in the world?
I kind of want to move to Austin, Texas.
What's in Austin?
I feel like everybody's in Austin. I have a bunch of friends down there. The e-commerce ecosystem is awesome. I mean, the weather is great. Like I visited down there in July of last year, and it's just got a good vibe, man. I mean, it's just like a bunch of young kids all kind of hustling at the same thing, all moving down to Texas where they don't have to pay income tax, I guess, which is like also a plus. So, yeah, I'm thinking about moving there in the near future. But other than that, I'm really into snowboarding. So I love being out in Colorado, and my family's got a place in Steamboat that we love to go to. So maybe somewhere over there to get a little riding in.
Nice. Who in e-commerce or finance in general is worth following in your opinion?
Yeah, I think like around finance on like Twitter specifically, like there's this like pretty robust lack of content, and like I like to like tweet about this stuff and like put out some stuff, but like if you want to like really like build a following, it's like a lot. Like I feel like I tweet all the time, and like nobody cares about my tweets. Partially it's because like again like finance and accounting like it's boring stuff. But like I do it because like I looked for it at one point, I couldn't find it. And so like I think like one of the things that I tweeted the other day was like a cost of capital model, and it's like when I remember like I spent 4 months in the debt markets last year like trying to figure out like what's the best thing to do, and it's like nobody puts content out about this stuff because it's boring, I guess. I don't know why they don't. So to be totally honest with you, like I don't think there's anybody that, at least not that I'm aware of, that is like a have to follow as far as like learning about finance and stuff. As far as like e-commerce goes, I mean, there's a million people. You get your classic sort of like blue chip guys like from Nick Sharma and Dennis and like those kinds of worlds versus like the smaller guys who talk. So I honestly don't really have anybody like particular in mind around finance, but there's no shortage of them in like sort of broader e-commerce or marketing.
I wonder if because you put crickets on all of your co-founders' posts.
Did you see that? Oh my god, that's so funny. So Oliver like just got on Twitter, and I would like make fun of him by like tweeting crickets at his post because nobody would say anything. And then like 4 days later, he has like half the following that I do. So I was like, okay. Like, I'll just
I laughed when I was looking through. I laughed. He put a tweet and instantly put a cricket, and then he just put "Come on, man" with a face.
That personally cracks it up.
Got me. Don't stop doing that. It's funny. Drew, listen, thank you so much for generously taking the time. I've really enjoyed this conversation. I hope everyone listening has enjoyed the conversation as well. And we wish you all the best with the business and your future. Appreciate it. Yeah, this was fun. I really appreciate you bringing me on here. The fact that you're still here at the end of this episode tells me that, one, you must have enjoyed it, and two, you're probably as big of an e-commerce geek as I am. Thank you for sticking around, and I just want to give a special thanks to Rewind, Clearco and Vixer for sponsoring this episode. You can find more information and the offers that are associated with those companies in the show notes below. Please also, if you haven't already, go to ecom.gold and subscribe to Gold Club. You'll get alerts about upcoming episodes. You'll get extra content like playbooks from each of the people and guests that we have on the show, and you'll also get access to some of the exclusive content that we have coming up. And finally, do share the show with your friends. Give us a review. It really helps us to build our audience. I hope you have a wonderful rest of your day. Take it easy, and we'll see you next time.